Welcome to Friday Takeaway. Let's get started. London was plunged into chaos on Wednesday when a terrorist attack left 5 dead. A policeman was stabbed, with the assailant later shot dead by another policeman. In the markets, the US equity rally proved to be short-lived after the rate hike last week. On Tuesday, the Dow fell 238 points or more than 1% as fear returned to the market. This is the biggest decline since the US elections last year. On the domestic front, all eyes were on Jack Ma. The executive chairman and founder of Alibaba Group was in Malaysia. He and PM Najib launched Alibaba's first e-hub outside of China on Wednesday. The rationale of this digital free trade zone, or as they call it, DFTZ, is to lower trade barriers and provide access to global markets for SMEs and young entrepreneurs. As a result of the MOU, penny stock software counters spiked yesterday. We will talk about one of the stocks later. On to fuel, the government will be announcing ceiling prices every Wednesday, effective next week. Retailers can offer discounts, but they have to get the okay from the ministry first. Moving on, Bank Negara has forecast the country to grow between 4.3% and 4.8% this year, compared with 4.2% in 2016. Growth will continue to be driven by domestic demand and supported by private sector activity and public sector expenditure. And guys, the Malaysian government overspent again last year. It's asking for an additional 3 billion ringgit on top of the 267.2 billion ringgit allocated under Budget 2016. The bulk of it, about 2.25 billion ringgit, went to contribution to statutory funds. This isn't the first time the government has overspent. It has asked for 2 supplementary budgets every year since 2009, and at least one each year since the late 90s. The saving grace is that this time, 3 billion ringgit is not as sizable. In 2012, the supplementary budget was as large as 25.97 billion ringgit. A quick look now at the benchmark composite. The CI is up 0.06% to 1,748.07 points as at 10 o'clock this morning. That's 0.16% higher from last Friday's closing. Not a great week for oil though. Prices fell to an almost 4-month low, with US crude inventories rising faster than expected. Brent crude was traded at about $50.6 a barrel this morning. Next up, some big weekly movers. The first one we have is Dataprep Holdings Berhad. It is the first Malaysian IT company to be listed on the stock exchange. That was back in 1991. 46 years of experience. Clients ranging from government, education, telecommunication, and financial services sector. It develops and maintains computer equipment, systems, and software. Dataprep is one of the penny stock software counters that caught investors' attention after Alibaba launched its e-hub in KLIA Aeropolis. There is also speculation that major shareholder Dato' Lim Chee Wah will conduct a major corporate exercise with the counter. If you recall, Dataprep is heavily involved in the development of the $2.9 billion Genting Secret Garden Resort in China, the venue of the Beijing Winter Olympics in 2022. That project is of course the brainchild of none other than Dato' Lim. It's been loss-making for 5 consecutive quarters. For its third quarter ended December last year, net loss narrowed to 217,000 ringgit from a net loss of 1.7 million ringgit a year earlier. The company said this was because of fewer big projects being awarded. It also says the weak ICT market conditions are expected to continue for the rest of its fourth quarter. There is no analyst coverage of this stock, but it has seen a massive amount of shares transacted since March 17, just a week ago. Over 150 million shares were transacted yesterday. Share price dipped slightly this morning, trading 5.38% lower at 62 cents as of 10 o'clock. Bursa Malaysia sent it a love letter last Friday after its counter surged 61% to 43.5 cents that day. Next up, we have George Kent Berhad. The company has successfully diversified its base from water infrastructure projects to specialized projects in healthcare and rail transportation. It also provides water metering solutions for households and plant and industrial use. With 1.1 billion ringgit worth of new jobs secured last year, George Kent's order book now stands at 6.2 billion ringgit, which gives a superior cover of 10.4 times FY17 construction revenue. It posted a 114% jump in net profit for its fourth quarter ended January 31st this year to 42.15 million ringgit. This is because of the improvement in gross profit and lower sales costs. It is proposing a 2-to-3 stock split, increase the float to 563.3 million shares to improve liquidity. Revenue was however down 29% to 189.14 million ringgit due to lower contributions from its construction and metering segments. Its counter has jumped 191% to 3 ringgit 93 cent over the past 1 year. Only one research house is covering the company, that's HLIB. It says George Kent's core earnings in FY17 was above expectations and is expecting the company to deliver stronger performance going forward. It has a buy call on the stock with an unchanged target price of 4 ringgit 73 cents.